Hello, everyone. Welcome to a weekly analysis. You know, last week we did not, record the video or rather, give an analysis or projection for the week. But that's simply because the market was basically in a pullback, right? Now there are some things I'm going to say on it because there's a lot to cover. There's a lot for us to cover today or rather this week, right? So the first thing I'm going to talk about is pullbacks, patience. Second thing is going to be knowing when to wait and knowing when to execute. So the first thing is the pullback, right? So pullbacks happen on different time frames, right? I say again, pullbacks happen on different time frames, meaning the weekly time frame can have a pullback, the daily time frame can also have a pullback, right? But in the case of the dollar, we always trade the dollar, GPSD, in this case. So, but in the case of the dollar, we seem to be having a pullback, right? We seem to be what having a pullback like so because we've had one like so and we're having another, right? Now, it is very important for you to understand that when there is a pullback on a weekly time frame, you should stay and wait for the former pullback, like so, right? You should stay and wait for the former pullback to be equivalent to the future pullback. This is the secret to entering at the right time, right? This is the secret to entering at the right time, like so. Now, if you can see, we've basically completed this pullback. Now the second thing I'm going to talk about is the right execution. Now when you see a push like this in the market, right, you see a pullback like so, right, the market is having a lower low and a lower high, conundrum and whatnot, and then you see a pullback like so, right, do not execute at the touch of the support. Don't execute at the touch, execute at the bounce. Now, I'll give you a logical analogy, right? When you're in a car, you're driving, right, and you're about to make a U-turn. Have you ever, for those who drive, have you ever, made a U-turn by just, speeding right through the turn, or do you get to the point of turning and then stop and then you make a turn? That's what I'm trying to say right here. The market, they are not just gonna trust me because listen, these things happen. These things take time for you to understand because you're gonna have to lose to learn these things. I know I have. You see what I'm saying to you. So I'm coming on here to at least cut your learning time. But it is also important and imperative for you to take your losses. Yes, it's important for you to take your losses. If you go on the chart, you will notice that whenever we get a lower low and a pullback into an area of interest or a support like so, right, we don't just because we've gotten there we execute. No, no, no. You need to see a bounce. You need to see a bounce from this area, right? Like so. Now, what do I mean by a bounce? You need to see a candle. For example, this is the weekly time frame. This works for the daily time frame, for the 4 hour time frame, right? For the 1 hour time frame. But it is very important when the market has gotten into the area of interest, like so, right? You can see even in the past it happened when the market has gotten into the area of interest, like so. You can see this candle is a forceful candle, right? It's a huge candle. It signifies the momentum. Now, you don't just want to sell because you go to the lower time frames and look for sell opportunity because we've touched. Trust me, you are going to get opportunities, but the markets are going to take you out. Yes, it will take you out because you are entering at the wrong time. You need to be precise with the market. The market, you need to be precise. Your executions need to be pristine. Now, when we got to this area of interest, we touched. You can see that the market did not just drop immediately because we've touched the support, right? You can see that it had to what create a turning around candle. Now, this is just an analogy, right? So now, if you go to the candlestick Bible, right, you need to go to the first candlestick Bible because there are two of them, right? The second one was summarized by the West. It's something to you by Wall Street and whatnot, and then put out. So there's the first candlestick Bible in plain black and white. Trust me, that's the one you want to get involved with, right? Not this oversaturated one everybody's selling, right? So now it talks about turning around candles, right? Turning point candles, meaning dojis, especially the hanging man. Now this candle right here, you see, it's called a hanging man. This candle you see right here, this candle you see right here, is called a hanging man. Whenever you see a hanging man in this direction of a pullback like so, it signifies a turnaround. I can show you many instances where the markets will show you a hanging man candlestick like this, and then a huge push to the downside or to the upside, whatever case it may be. But it's not just a hanging man. You need patience. You need extra patience. Now I understand that it is going to take you a week for you to wait. Listen, I'd rather wait, right? I'd rather wait and take one trade a month. Yes, I'd rather wait and take one trade a month than execute and then take two losses here and two wins here, or three losses here and four wins here, and say, oh, my risk to reward we sort me out. You see what I'm saying to you? It's very important. I'd rather wait and take one trade a month and then that's 2% or 3%, whichever the risk to reward may be, right? So it is very important to be patient. Trading is more about patience. It shouldn't even be called trading. It should be called patience. The game is patience. You need to wait. It is important. That's why even the Bible talks about getting more than seven sources of income. Because if you try to if you try to rely only on trading, for those who trade the highest time frame like we do, you are going to make you're going to sit on your hands a lot of the time, and it gets to you. So get a book, read a book, right? Exercise, go for a walk, run, read your Bible. It's something these things occupy your minds whilst you sit on your hands. It is very important. It is very, very important. So I need you to understand this, because whenever you see a pullback into the support, don't just execute, look for sell or bearish engulfing because we've gotten there. No, 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 no. You have to wait another week. I understand it's going to take time, but trust me, the game is called patience. Right? It's called patience, not trading. Trading is a form of is a verb, right? It's a form of execution, right? The game is called patience, sitting on your hands. Now, for this week, we are going to mirror the exact same thing that happened this last week, last month rather, here. Now we've had our pullback, we've touched our support, right? For those who may have executed on the GPUSD and UUSD, you notice that you've taken a loss, or that you've taken a loss. I know I have. So it's very important that after this push to the upside, this weekly push to the upside, because the market basically consolidated for like 4 weeks. I understand, but this is the game. Whenever you see a consolidation like this, right, trust me, the next week or the next month, you are going to have a lot of opportunities, and that is what we're going to do. I'm going to show you two opportunities on GBPUSD on how we're going to capitalize on this momentum we're about to gain on the dollar to the downside. Now, excuse me, now you can see that we've had the push. Not only we've had the push, we've also concluded and closed this candle right here, meaning this is a doji. This is a doji, meaning after a momentum push like this to the upside, we've come to a rest. We've come to a stop. Okay, now I'm looking to make a U-turn. Now I'm looking to make a U-turn. Right now I'm looking to make a U-turn, just like so. We had a push, and then we had a sign, a doji, a sign that okay, I'm willing to make a U-turn. The exact same thing. A push, a sign that I'm willing to make a U-turn, and then we should expect the next week to next week candle to open by Sunday, and then we have a plummet to the downside. It's going to be fast. It's going to be precise. Trust me, and you don't want to miss this push to the downside. You don't. You see, exact same way we had this push to the downside. The exact same way we're going to get a push to the downside. You don't. Now, all of these things are conjectures, right? Because it's for me to just come into the market and look at what has happened in the past to predict the future. None of these things may even happen as I'm saying it right now. Something else may happen, but it is important to have a plan. If you fail to plan, you plan to fail. It is important to have a plan. When you come into the market with a plan, trust me, you are ready for anything that happens. You are ready for anything that happens. You're not going to be caught unaware. Coming to the market with buy or sell, in mind helps you trade in a specific direction. Not buy gold today and sell gold tomorrow. Not buy GBP today and sell Euro USD tomorrow. No, no, no. Stick to one trend, stick to one analysis, and stick to one strategy, and stick to one trading plan. That is what makes a profitable trader, not the profits. Anybody can make profit. Just go and copy signals and you become profitable. But not everybody can become a trader. A good trader is one who follows a trading plan. Because you've made profit and you've broken your trading plan does not mean that that is a good trade. Stop lying to yourselves. We lie to ourselves when it comes to trading. It's very important. Those who move forward are those who tell themselves the truth. Those who journal their mistakes, even in your profits, you journal the things that you did not notice when you were making profits. This is how we grow. I know I'm seeing it in my life, so I expect you to see it in your life, right? So now we've come to a conclusion that okay, the dollar is bearish because why? We are in a mid-term reversal, meaning The structure is bullish. That's what I'm going to say to you right now. The structure is bullish on the dollar, but we are underneath supports like so. So whenever we are underneath a support on the monthly time frame, don't get it twisted. These levels are from the monthly time frame. So whenever we're underneath a level like this on the monthly time frame, we are looking to sell in anticipation. Like I said in a couple minutes ago, everything is conjecture, but we look to the past to predict the future. Now, in anticipation that okay, with the past, analysis and with the past, catalysts and phases that have happened, in the previous years, we can say, okay, whenever we come underneath this level right here, we are looking towards sell to the downside. Now, if you look to the left, you will notice a double top like so came up. Excuse me, let me trace it out. You notice a double top like so, right? You notice the double top like so underneath this level right here, underneath. And also, if you look to the right, we're having the same. We've had because a double top or a proper chart pattern is one that breaks the neckline. So a double top is equal highs, right? Like so, and then we break the neckline like so. The moment we close underneath this neckline right here, we form a proper double top, a proper chart pattern. So the exact same thing that happened on the monthly time frame. We've closed beneath the neckline like so. So we're expecting a drop, a shot to the downside. So the same thing happened there. We broke it and we had fall to the downside. We broke this neckline here and we had the push to the upside. Listen, these things are conjecture. But with the previous behavior of the market, I can anticipate a proper future in the market. That is why we have risk management. That is why we come in here looking to risk a certain percentile of our account, not the whole account. Not every trade is going to be every trade we get in is a risk. Every trade we get in could be a potential loss. So we have risk management on our side. Moving forward, now we've been trading the GBP for since the beginning of the year. Or rather since last year, I've been trading GBP because we've been bullish. This is how I trade. I look forward to trade just one trend, not just one pair, but also one trend. It's very important. I ride a trend. It's something to you. I'm not involved. I'm not involved. You know, in this kerfuffle of other accounts, other pairs. I'm just looking to ride a trend. Even on the GPUs, you can see we came above this support right here, and then on this resistance, and then became support, right? And then now we've broken the neckline. This is the neckline, like so. We've broken the neckline, and then these are signs. These are signs. These are signs. All we have as traders is the mindset of anticipation, the mindset of predicting. All right, I think it's gonna do this. I think it's gonna do that. How do I know? I look left. I look left. That's how I know. There's no special suit to. Yeah, I'm talking from that is a Black Panther, a Black Panther for those who have watched Black Panther. That's what Mbappe said. He said no special suit. There is nothing special. All we have is our previous, our past in the market. What has happened in the past? There's nothing special. No special indicator. No special mentor. You see what I'm saying to you? Just simple, top-down analysis, just simply looking left. That's all we have. Nothing else, right? So now on the monthly time frame, we are bullish. Structural wise, we are bullish. We are above support. We are going into a new zone, which is this level right here. GPS, we are going into a new zone, which is this level right here. Everything is good. GPS is going to get all the way here. You see, I'm anticipating it. It may not even get there, but because I anticipate it, because I plan towards it, I am ready to take opportunities that the market will present in that direction. That is how it works. That is how we will become more great traders. Anyway, moving forward. Now, if you remember what I said a couple of minutes ago, I said whenever you see the weekly time frame pullback, whenever you see the weekly time frame having a pullback, even the 4 hour time frame, the daily time frame, whenever you see a pullback in the market, right, we need to see a turnaround candle. I need to be told, all right, I'm ready for a bounce. You see this huge push to the downside? I need to see a turnaround candle. Now, this is what we call a hanging man. This is a hanging man, dude, right here. This small candle, this long wick you can see, and a small head. This is a hanging man, upside down. If it were, if the wicks were here and the head was there, it would be a pin bar. You have to study these things. You have to study these things. You cannot come into the market looking to freestyle, looking to copy trades. You're not going to go far. What if your mentor, what if the person you're copying trade dies? God forbid. Where will you be left behind? I know a signal provider, who has died, and then where are they going to be now? Where are the trade people copying the trades? Where are they right now? You see, I'm saying to you, looking for another mentor to copy off of. You're not going to grow that way. If you want to become really, 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 significant in this market, in this industry, trust me. Anyway, you can see in the pullback, you can see that yeah, we had a hanging man as well. So you can see this candle looks exactly like this candle, only in different colors, but the color does not matter. This candle looks like this candle, and after this candle was formed, what happened? A huge Marubuzu candle to the upside. That is what we are anticipating. That is what we are expecting. It may happen, it may not happen, but I am better off anticipating it to happen. That is how we become great traders. The pullback is done. The pullback has ended. The worst is over. Now let's prepare to execute. Let's prepare to what? Enter the market. Now, this is where I go to the lower time frame, the 4 hour time frame. I like the fact that we are still bullish, right? The 4 hour time frame, the 1 hour time frame to draw my counter trend line. Now, I'm looking to execute just like so, right? From the highest week to the lowest week and whatnot, right? So you know how to draw a canal trend line. There's nothing special, just like so, right? So we need to see a break of financial line, a break of structure, and our buy. Now this line is here because this level, this 1.37000 is a very, very, very dangerous level. He's a dangerous guy. So we have to put it into consideration. Now, in my journal, I've written my concerns down. If we get here on the 4 hour time frame or the 1 hour time frame and I see a double top, I am getting out. I'm taking partials because I would be anticipating a reversal. These things help us to avoid, giving back what we've made in the markets back to the market, because it is a cardinal sin to what, give back your profits. Yes, do not give back your profits. Have contingency plans in place. Now, when we've broken this level right here, right, when we've touched the 100% on daily time frame, I will be anticipating to buy from this level right here. But this will be for the couple of coming weeks in March. March, we're going to march forward. Now, this the March, we are marching forward. Trust me, I'm looking to make a considerable return in March because it is the end of the quarter and I need to see evaluate myself by the end of the quarter. So let us keep our trading plan underneath our arms. Hold it, keep it. That is what we have to one up the market. So that's all for this week. Have a great week. Ciao, ciao.